Vincenzo's Go Crypto Investing this June the 17th, noontime, 2025 daily update. As there's, I think, going to be a lot of fireworks this afternoon, as there already has been, as the Federal Reserve is going to announce whether they're going to cut interest rates today or remain the same, which the market has priced in remaining the same. And that is what I am currently expecting, is the market to remain the same. And then the whole pat, you can see if we start out with the XRP price. Let's put this on focus because, of course, we'll get some updates now that we're on here. You can see if we look at the XRP price, let's go into the 4-hour time frame. You can see we're in the same area that we were yesterday. The last couple of days, really, it's been the same type of thing. We're bouncing off the neckline support at the 209, rejection. You can see we had our last pump up, and then yesterday we were just slithering down just along and above the 200-day and the neckline at 209 in the daily time frame. You can see the neckline support, and then the 200-day is right there. Got rejected off the 100-day and the daily at 224. And that is what we're watching out for in the XRP in the short term. We've been in this downtrend ever since we had the Donald Trump rally that culminated in early December in the January with a 340 top, and we've been coming down ever since. But since we've been coming down, we've been holding this neckline support back here in February, again in February, March, whole bunch in March. We had a quick fake out, and then we got bought back up, held it back as support, and this confirmed it still as support and not resistance. If this would have came back up from here to this area and then quickly got rejected, that would have confirmed it as a flip to resistance. Instead, it held it as support right here in mid-April, and then we had that big uptrend to extend the rally to the regional top at about 266, and then we've come back down now and been trading straight sideways ever since about May the 25th along the neckline. And if it breaks the neckline and confirms it as and flipping it the resistance from support, we'll trade quickly down here all the way down to the $1.61 wick low and eventually down here to the $1.29. If you're trying to stay bullish and come back up into this regional top, you got to hold the neckline support, get on top of the moving averages, the 100 and the 50 right here, and then fight your way back up towards the neckline support or the overhead 255 major resistance. But I think there's going to be a lot of volatility today when the Fed talks, and that's what I would plan on. If you're looking at it, the market, today's not a day to try to jump in and out. There's going to be a lot of volatility. You can see, and this is very interesting in XLM, we've actually snuck below the critical 25 cents, an area that, just like the neckline support in XRP, is at 209. This 25 cents is just as important as that neckline support in XRP. You can see we bounced off of here, back here in February, March, had that same fake out to the downside, came back up beautifully, and then see how it came back through it, and then touched it and held it, and then we had our secondary pump to our regional high of about 33.5 cents. But just like XRP, we're traded sideways now the last couple of weeks along the 25 cents, and now we're dipped just below that critical support level, and this is where the test is going to come. As we dip a little bit more below and we come back to retest this, do we get rejected and confirm this finally as a major flip to resistance from support, long-running support? Do we flip it to resistance? And if we do, that would drive you down to 18 and then 14 cents. Great accumulation zones down here. I'm not a financial advisor, but a great accumulation zone right here. Not so much at 63 cents like we were back in February, right? If you're trying to stay bullish, you got to quickly get back on top of this 25 cents like you did right here. Get over these moving averages that are all running in a row from bottom to top, the 50, the 100, and the 200. Got to get on top of those and then make another run over here at the 33 cents. And if we round out this with the Bitcoin price, you can see the Bitcoin price is the same thing. We're threatening to go very bearish, which could happen today. We've been in this bearish, what actually brought you to a new high. Oops, that's not what we want. It actually brought you to a new high off the first high back here, going from the Donald Trump right here. See that? Then you had a 30% correction. Then you had this rally. But now you've traded sideways and out of this rising channel, and you do know those are bullish continuation patterns, but they're bearish reversal patterns after they conclude, and now it's traded sideways for a couple of weeks, and it's threatening to break down. And you can see where it keeps getting supported on, which is the 50-day moving average in the daily time frame. And you can see our probability-based track that aids us into our basket to make forecasts, trends down, sideways to down, which is price actions traded sideways to down. And now we're targeting, we're briefly hit some support again on the 50-day moving average, just like you did a few times. If you breach this 50, you'll come straight down to this 97,180, and then you could have a slight bounce. But by then, these moving averages would start trending down, and that could be what forces it down here to the 93,200-day moving average, right? And the Bitcoin price. So that's what we're watching out for in the short term. Like the channel, subscribe. Peace and love. Direct Side Bro. Jai.